Shares of Taiwan Semiconductor are trading around 5% lower today, despite them forecasting nearly a 30% surge for their second quarter sales coming up. And the dip in stock price happened even though they reported their biggest yearly profit gain, driven by really strong demand for its AI-powered semiconductor chips. And a lot of the articles I'm reading about it, some are saying it fell because of a cautious industry outlook, which is kind of true. But I think the reason it's down today and just a little bit in general from its all-time high is really down to three reasons. Okay, they didn't beat their earnings call by a wide enough margin. I think this holds a little bit of weight. If you look at their last 3 quarters, okay, four, I guess now. 4 quarters ago, they beat their earnings by 9%. And then it was 7%, and then it was 11%, and now they just beat their last quarter by 5%. So I know it's quite odd, but I think the market was really expecting TSM to do even better than the market was expecting them to. It's kind of odd how investor behavior works that way, but it could be a factor. Number 2, TSM's price to earnings right now is actually lower than the tech industries, so it might look undervalued from a price to earnings standpoint. But if you take a look at the price to sales, it's almost double than the industry average, hinting that it could be overvalued. And, if I were invested in the stock, I would also be looking to lock in a lot of those gains right about now. If you look at the chart, the stock is trading incredibly high due to its, relative to its past history. So, if I had bought it a couple of years ago, I'd be looking to lock in some of those gains. And that flows into my third point. Is a third factor could be the geopolitical tensions on the rise in Taiwan, because it's unclear and there's a lot of uncertainty around what's going to happen on that front in the future, as Taiwan's a very, very important U.S. trade partner. And there's a lot of uncertainty going around in the smartphone sector as well, because some are speculating that the smartphone demand has peaked given Apple's recent iPhone delivery numbers. But to give you some idea of just how important Taiwan, or specifically TSM, is to the U.S. And the world right now in general, AMD, Apple, ARM, Broadcom, Marvell, MediaTek, Qualcomm, and Nvidia are all customers of TSMC, of Taiwan Semiconductor. And if you look at the market share, TSMC single-handedly manufactures around 50% of all the semiconductors in the world. 50%. That is insane. And, we all know how important semiconductors are in today's digital age. So, Taiwan and TSMC is just incredibly important. And I believe that's why we've seen such an interest in this stock lately. But like I said, now that things are starting to get a little bit unclear as to where they go from here, I think that previous investors are just looking to lock in those gains, and I do not blame them. And personally, I do like the company. I like the demand, the future growth, and I do like the fundamentals as well. But honestly, I think the days of triple-digit returns from this stock are behind us, and it doesn't mean that you shouldn't invest in it, because like I said, it is a solid stock with great potential still. But I think the reasons that you would invest in this stock now are more for value as opposed to growth, how it was previously. And so it will be very interesting to see what happens with the stock in the near future, and you best believe that I will be keeping a close eye on it. So thank you all for watching. Please drop a like. If you have any thoughts, feel free to comment them below, and I will see you next video.